Good morning, Mayor Valensky with Driving Markets. I hope you're well. Okay, so you've got the VIX, which is the volatility index, at nearly 30 points, and that shows extreme volatility in the market, which is markets are whippy, and you can see that when they're down, they're up, and then they go down. And yesterday, the market shot up. The Dow was up over 600 points, and the Nasdaq was up over 300 points on the back of positive earnings in the States. So the feeling is that Meta, Facebook, which is quoted as Meta on the Nasdaq, it jumped over 17% yesterday because the investors and the analysts were happy with their numbers. What numbers were they happy with? They weren't particularly happy with their earnings. However, they managed to add 1.9 million users. In addition to that, they've also cut their costs, and that pushed Meta, Facebook, up to a 17% jump, and that also fed into the rest of the market. Amazon is an interesting one. Amazon missed its earnings after hours last night and is down 13% after hours trading. But meanwhile, Apple, that posted earnings last night, came in with better than expected earnings, and they've sold over 50.57 billion handsets. 50.57 billion handsets have been sold in the last quarter. I mean, that is just unbelievable number. Anyhow, so Apple is surging, and Apple is probably going to pull the Nasdaq up. Remember, we've got a lot of volatility, and you've got a lot of effect of nervousness within the marketplace. So one day's up, one day's down. You've got to look at the overall trend. McDonald's was an interesting result yesterday. They came out beating expectations, saying that the profits are higher than expected due to fast food. So obviously there's a lot of people going out there while they're buying, while the consumers are purchasing, they're also popping into McDonald's for quick fast food. That could be the case. Who knows? Not sure. Also, bond yields went up to 2.8% yesterday, and rising on the back of the Fed meeting, which coming in next week on Tuesday and Wednesday, and they're looking to raise rates at 50 basis points. There's something I want to talk about that specifically. The ICE, the ICE dollar index, is the highest it's been since 2002. If you look at the track of the dollar since January, it's just gone in one direction, and that is north. It's gone up over the last 4 months, and likely to go up further against a basket of currencies. Surely against all the majors, as you can see, it's gone up, but also amongst other currencies as well, the dollar is strengthening for two major reasons. Number one, expectations that interest rates in the States will rise, and based on the fact that they've got rising inflation there, then that is going to fulfill its expectation that the dollar will be rising over the next year. So you can expect dollar strength in the next 12 months. And also there's a flight to safety. So when there's a nervousness, whether it's Ukraine-Russia war, or whether it's inflation or corporate earnings, then when investors pull money out of other investments, what do? They generally will go into something more secure. And the dollar is one of those safe havens where investors feel more secure and buy the greenback. So that is one of the reasons why the dollar is strong, and the dollar is likely to rise going further forward. For those FX traders, look at dollar strength and make sure that you're probably long, at least in the next few months, because if you're a short-term trader, then obviously in a 1 to 2 days you could be caught out. However, if you're a swing trader, you'll see the dollar moving up over the next period of weeks and months. Let's look at some other shares that are going on. So you've got the semiconductors came up yesterday. Boeing dropped over 12% on the back of poor projections and poor forecasts. What it's looking at is saying they're not going to sell as many jets as they expected, and therefore their earnings were pulled back. Apple is continuing its share repurchase program. So not only is it making huge sales, it's going to be buying back some of its shares, and that's going to push the price of Apple even further north. So that's an interesting share to watch, because Apple is a pretty solid company and they keep beating forecasts. What I'm concerned about is that all of the earnings reported now are based on the last quarter. And in the last quarter, obviously you had, in the beginning of March, you had Russia invading Ukraine, and they may not have fed through to the pricing or the profits of the companies. We'll see in the next quarter what impact the Russian-Ukrainian war is having on corporate earnings. But this last quarter was probably based on the sales, not only of the last quarter, but also of 2021. Yesterday, the GDP in the States came in at minus 1.4, sorry, a drop of 1.4%, and analysts were expecting a rise of 1.1%. Remember, in December 2021, the GDP in the States was running at 6.9%, and now they're expecting growth annually in the States to drop all the way to 1.1%. Remember, if it goes into negative territory, then that is going into a recession, and the probability is we're going to experience a recession going forward in 2022 in the last quarter, going into 2023, and therefore that will have a big impact on corporate earnings in the US and Europe and the UK. And as far as bond yields in Europe, the German and the French bond yields, you've got to look at that, because even though the ECB, the European Central Bank, is saying they're not going to raise rates, the bond yields are identifying a rate increase in the near future. So it's something to keep an eye on, even though Christine Lagarde denied any chance of an interest rate rise in Europe. That's more or less it for today. Wish you a good weekend. Have a happy bank holiday. If you want to contact me on LinkedIn, Instagram, YouTube, WhatsApp, Twitter. I intend to do a podcast soon. Mayor Vedensky, Driving Markets. Have a good day.